Hello, ladies and gentlemen. Blair Braden, your co-founder of Denver Wealth Management here, April 9th, 2020. Today, I wanted to talk about investments. We have been saying for a while now, the last month and a half, hey, it's a great time to look for opportunity. It's a great time to be buying investments with all the fear and the blood in the water that's going on. And so I wanted to talk briefly of what type of investments are you talking about that we should be looking at buying right now. You keep hearing Zach and myself and probably the news and all these sources talk about high quality investments. And what does high quality investments mean? How do you gauge that? What we're looking for, our idea of high quality investments are investments that we believe can withstand this test of time that we have, come through this, and not only come through it, but prevail and be stronger through this. And so there's a few things that we're looking at when we're trying to determine what these companies are. And it all comes down to their fundamentals, meaning their balance sheets, their cash flow, how well can they afford their expenses that they have coming up. And so as we're looking at right now, we do think it's what's called a stock picker's environment, where I'm not necessarily excited to go and buy every stock in the stock market right now. There's more select investments that I want to be focusing our attentions and our purchases on. And as we're analyzing these different investments, there's several things that we're looking for. So we're turning to their financials. And this is all public information that anyone can look at to look at what is their predictability to be able to withstand these different possible economic downturns that we're going to be seeing in the forthcoming months here. And so think about it your own self. What is one of the biggest drags that you could have in the next coming months financially? Well, for most people, it's they have more debt than they can afford. That is the biggest issue that would cause maybe a layoff or a lack of work in the next couple of months. That would cause you the biggest stressor right now financially, is not having the cash flow to pay for your liabilities. It's the same with these big companies, cash flow for liabilities or their assets they have on hand to pay for their liabilities. So just one quick technical term here, as we're looking at these companies that we're looking at, is what's called the quick ratio. The quick ratio, what that means is what liquid current assets do they have on hand, so cash or something that can be turned into cash pretty much immediately. How much do they have on hand in that respect to be able to pay any of their short-term debts that they have coming due within the next year, also a current or short-term liability. And so the higher that ratio, the better, more assets they have in liquid are easily converted to liquid assets to be able to pay for those current liabilities that they have. So again, we think those are good types of companies to be looking at right now that have the cash or the cash flow or the liquid assets available to be able to pay off any future liabilities, weathering this storm. Now, there's several factors we're looking at for these individual stocks, but that's just one of them I wanted to talk about today, the quick ratio. And that's something to take a look at as you're looking at these stocks. Thanks a lot for listening and watching. Hope you all have a great day. We will get through this, and call us or email us with any questions.